A very pleasant good morning, everyone. So today we are going to focus on inverted tax structure refunds. So many of you would ask that from the inception of GST, there is a concept called inverted tax structure refund. Of course, to persons who are not regularly practicing in GST, to be on the same boat, I'll just give a sum up on what are all the refunds available under the GST regime. Then I will jump on to the inverted tax structure concept and the recent intricacies that we faced during filing inverted tax structure refund and obtaining the refund from the government. So the first thing is, once if we say GST refund, we should understand that it is not an incentive from the government. It is not like a subsidy, like you start in an SEZ zone or you start in an EOU unit. You directly get a subsidy on your turnover, or while obtaining a bank loan, you get an interest subvention. So that is not the case with GST refund. So let us all be on the same boat. The GST refund is only the refund of what GST you have already paid. It is very similar to income tax refund. In income tax, what happens is a person who has to give revenue to us, our customer will give revenue to us. While giving the revenue to us, they will be deducting a tax called tax deducted at source. In some cases, they will be collecting tax. Even if we are selling to them, if we are buying goods from them, they will be collecting TCS, tax collected at source. In some cases, we will also pay advance tax because the advance tax is based on the projections. So periodically, every quarter, we will be paying advance tax. So in a scenario, while filing the income tax return in July or September for that matter, while filing it, if we come to know that we have paid excess tax or our customer has collected excess tax of TDS from us, then we will file the income tax return and get the IT refund. Very, very similar to that. In GST too, if we had paid more tax to our supplier, we will be getting it as a refund. So let us all be very clear that GST refund. Let us all be very clear that GST refund is not a subsidy given by the government. GST refund is the tax that we have already paid to our supplier, and the excess tax that we paid to the supplier, we get it as refund. So many conservative taxpayers I see, if they have very small accumulation in electronic credit ledger, if it keeps on accumulating, they are little hesitant to apply for refund because they think that okay, this might invite scrutiny from the department. No, it is legally provisioned under Section 54 of the CGST Act to say that if you had paid excess tax during purchase of any goods, you are eligible for refund. So that in itself will not invite scrutiny if we file the correct refund application, if we file the correct refund amount as per the formula envisaged in Rule 89, and we get the correct refund amount from the GST department. So here, once again, I would like to summarize saying that GST refund is only the refund of excess tax paid by you to the supplier and not any other way. It is not a subsidy given by the government. It is not simply liquidation, or it's not based on your turnover, nothing else. It is only based on what you have excess paid to supplier. If you have paid excess compared to your turnover, then that excess will be given as refund as based on the pre-described formula. That's it. So in GST, there are mainly two types of refund. There are two types of refund. One is zero rated supplies. The other is inverted duty structure. Zero rated supplies is simply if you are exporting the goods or services, or if you are selling the goods or services to the SEZ units, those supplies are called zero rated supplies. In that case, you all know there are two separate bases where you could get refund. One is under LUT, one is with payment of tax. After paying the tax, you will be getting it as refund. So that is zero rated supplies. We have a specific webinar on the entire GST refund and exhaustive, the detailed webinar on entire GST refunds available in your YouTube channel that we personally presented last year. Today, the main focus is only on the inverted tax structure because of the recent developments and the recent intricacies that we face while filing the application. So, what I was saying is, with respect to GST refund, there are two types of refund. One is zero rated supply refund. The other one is inverted duty structure. Inverted duty structure refund. In inverted duty structure refund, what we all should understand is, if our input GST rate is higher than our output GST rate, we will be eligible for inverted tax structure refund. I repeat, if our input GST rate is higher than output GST rate, then we will be eligible under refund, GST refund under inverted tax structure. So, once I say this, it is very clear that a trader who simply purchases goods and sells the same goods will not get any refund under inverted tax structure because he is not processing the goods. So, whatever he purchased, he will be selling it. Whatever the goods he has exactly purchased, he will be selling it. He will not be eligible for any refund under inverted tax structure. Say, for example, a laptop dealer who purchases laptop from the manufacturer and simply sells the laptop to the end customer. He will not get any refund. As the laptop is the same, it remains the same product. Sorry. Yeah. So the laptop manufacturer who purchases the same goods and sells the same goods, he will have he will have the same GST rate. He will have the same GST rate, so he will not be entitled to any refund. A person who manufactures goods and sells it, his manufacturing raw material will be different and selling finished goods will be different. So only he will be eligible for refund if his input tax rate is higher than the output tax rate. So again, I would like to sum up: a person who just trades the goods will not get any refund under inverted tax structure. So the first thing, what and all you should check before filing for an inverted tax structure refund is, first check if you are eligible under inverted tax structure refund. First is, you please check whether you have a balance in your electronic credit ledger. Without having any balance under electronic credit ledger, you will not be eligible for any GST refund. So make sure that you have balance under electronic credit ledger. Only if it gets accumulated, you will be getting a refund. As I already said, it is not a subsidy. It is not given based on your turnover, nothing else. The excess tax paid only is refunded to you. If there is an excess tax paid, it would have got accumulated in your electronic credit ledger. So please get your electronic credit ledger checked before applying for refund, because the refund process is very complex. So after filing the entire, after preparing all the documents related to the refund, if you found that you have very minimum or no electronic credit ledger balance, you will be absolutely gutted. So it will be complete waste of time. So the first and foremost check that you have to do is whether you have sufficient electronic credit ledger balance. See, there is also a scenario where sometimes the credit ledger will be blocked. The credit ledger of a dealer will be blocked, alleging fake purchases. You all know that the jurisdictional officer has the authority to block your electronic credit ledger balance. At least, for example, if you have electronic credit ledger balance of 20 lakh rupees, the jurisdictional officer is of the view that in that 2 lakh rupees is not genuine ITC, it's some fake ITC. They can very well block the ITC. You cannot utilize that ITC. So you please make sure that you have sufficient balance in electronic credit ledger before applying for refund. Because if 20 lakhs refund, the jurisdictional officer has blocked 15 lakh rupees, and you are preparing documents for applying 18 lakh rupees refund, you will not be able to use that 15 lakh credit blocked ITC unless you go to the jurisdictional officer and satisfy him or satisfy the officer that it is not actually blocked, it is genuine ITC. It will take some time. So you please make sure that you have sufficient electronic ledger balance. Another thing is recovery. In recovery time also, there will be some sort of recovery if you have an electronic ledger balance and if you have an outstanding demand pending for a long time and if you have not filed appeal for it, your electronic ledger balance will be taken out. So the second thing is recovery. Third thing is, sometimes you would have filed an appeal using the pre-deposit of the electronic credit ledger balance. In that situation too, the electronic credit ledger balance gets reduced. So in that scenario too, you should be very careful. So before preparing the documents for the inverted tax structure, you please make sure that you have sufficient balance in your electronic credit ledger. So many times, being an auditor office, we also see clients sending us only raw data without the GST username password. They initially will send the raw data and they will ask us to prepare the refund annexure. But we are very, very particular asking the electronic credit ledger balance from them, because the MD would be of the view that the credit ledger gets accumulated. In the balance sheet, they would not have passed some entry. In their current liabilities or current assets grouping, they would have had an electronic credit ledger accumulation in their books of accounts. But practically, what books of accounts accumulate doesn't matter. End of the day, what is in your portal alone matters. So please make sure you have a sufficient balance in electronic ledger before going to apply for the refund. Second is, check if any of your input rate is higher than the output rate. See, for producing a finished good, there may be about 5 raw material you may need. I am talking only about inputs and not input service. I am talking only about inputs. For example, if you are paying rent, if you are selling a 5% output finished goods, if you are paying rent for your office or factory for that matter, the rent will always be 18%. Even then, you will not be eligible for refund, because the law is very clear to say that only if your input tax rate is higher than the output tax rate, then your ITC, you are eligible for inverted tax structure refund. So please make sure that your raw material, one of the raw material can even be a packing material. That's not an issue, but it should be an input and not an input service. So if any of your raw material falls under the higher rate category compared to your output GST rate, then you are eligible for refund. So even if one of the 5 raw materials, sir, every raw material is 5% only packing material is 18%. For that reason, my electronic credit ledger balance gets accumulated. Even in that scenario, you are eligible for it. So we'll see the refund formula. The refund formula as on date is, the refund formula is prescribed under Rule 89, Sub Rule 5 of the CGST Rules 2017. The refund formula they have prescribed is turnover of inverted rated supply. That is, you may deal with multiple goods, you may sell multiple goods, but you should take only the turnover of the lower rate goods, mainly 5% rate goods. That only you have you should consider into net ITC divided by adjusted total turnover. The total ITC on inputs, to be very particular, it is not the whole net ITC that you put in GST or 3B. Our ITC is bifurcated into 3 parts, mainly inputs, input services, and capital goods ITC. In that, you should take only the ITC on inputs. From that, you should reduce whatever you have collected from your customer, because that 5% you would have collected from the customer, so that you should reduce, and the remaining part only you should get refund. So minus tax payable on inverted supplies into ITC on inputs divided by ITC on inputs and input services. So this is the formula. This is the basic structure on which you have to file refund. Even if you have ITC accumulation, and based on this formula, if you don't get any refund, you are not eligible for refund, because the law is very, very strict on this formula. Even to go a step further, the portal will not allow if this formula doesn't yield you a positive figure. If it is a negative figure, the portal will not allow you a refund in first place to file the refund application. Every refund application is filed in the GST portal only. So the portal itself will not allow, even if you have an electronic credit ledger balance. And in this formula, if you, after applying figures in this formula, the result yields the negative figure, then the portal will not allow you to file the refund application under inverted tax structure. A simple navigation, many of you would have known, just for the namesake, a simple navigation would be if you go to your GST login and if you go to the services in application for refund, there will be several refund types. The first and most prominently used refund type is of that of inverted tax structure. So the first thing itself, inverted tax structure. So in this, if you click the inverted tax structure and give the period, it will pop up a calculation box and some offline utility that you have to upload. So before filing inverted tax structure, what are the documents that you have to keep ready? As per circular number 125, as per circular number 125, it was given way back in 2019. It still holds good. As per the circular number 125, what are all the documents you should prepare? The first thing is statement 01A offline utility. Statement 01A offline utility. Through the statement, you should upload all the sales on all the ITC transactions in that offline utility, and you should get it validated. Only after validating it in the portal, it will allow you to file the refund application. So what it will validate? Is it a simple mathematical calculation, or what it will exactly validate? If it is the question, then the answer would be, it validates a figure, a transaction you have given as sales, whether you have entered it in the corresponding GSTR1. See, for example, I am selling to Mr. A, I am putting invoice number 503, and for 1 lakh rupees, I am selling the goods to Mr. A, which falls under the inverted tax structure transaction, inverted tax structure turnover. So I am including that 1 lakh rupees in my inverted turnover. For that, I should give the breakup. Like to Mr. A, I have sold in invoice number 503, 1 lakh rupees. Like that, I should give the breakup in the statement 1A offline utility. From where I will give the breakup? From GSTR1, I should give the breakup. From GSTR1, I should give the breakup, because GSTR1 is invoice-based reporting of B2B invoices. So in GSTR1, through GSTR1, I will give the breakup. What the portal validates is, for Mr. A, if I have given the invoice as 503, and if I erroneously, through clerical error, I gave the invoice number in statement 01A offline utility as 403 instead of 503. It will not validate that invoice. I have given Mr. A an invoice of 1 lakh rupees, but while feeding in the offline utility, I erroneously put it as 10,000 rupees or 10 lakh rupees. It will not get validated. It will not allow you to file the refund application. So please make sure that you pull the raw data from the GSTR 1A transaction that you have already given for that particular period. Don't take a fresh entry from the books of accounts and then perform a reconciliation over GSTR 1A, because we believe that whatever is given in GSTR 1 is right. Then in that scenario, if it is amended, it is okay. The portal will consider that too. For example, if you are filing a March 2025 refund application, in March 2025, you have erroneously given the invoice number as 403. And subsequently, in May 2025, you have amended the invoice number from 403 to 503. In that case too, if you give the 503 correct number, amended, updated, amended invoice number, the statement 1A offline utility will be validated. The offline utility is structured in a way that it takes account of the amended transaction that you did in the subsequent period too. So it is very, very effective. Therefore, you please make sure what is the final correct value that you have given in GSTR 1A, that you have disclosed in GSTR 1A, GSTR 1, take that and work for statement 1A. Don't perform a separate working from our account, book of accounts, and then perform a reconciliation under GSTR 1. It is double work. So take the data from GSTR 1 and work for statement 1A offline utility. The other thing that you should give in the statement 1A offline utility is the ITC transaction. So with respect to ITC transactions also, the portal will get it validated from GSTR 2B for that portal. So if you give an invoice, for example, if you give an invoice for 10 lakh rupees, if you give a purchase invoice for 10 lakh rupees that you have procured raw material and you are giving it for 10 lakh rupees in statement 01A, it will get validated only if the corresponding exact entry is found in GSTR 2B of that particular month. Otherwise, it will not get validated. The next and most important thing is Annexed B offline utility. See, earlier Annexed B was always to be uploaded since the introduction of the circular number 125, as I told in 2019. But earlier the circular number, as per the circular number 125, clearly said it is an offline document that you can simply attach. As PDF. So while attaching PDF, there is no validation, nothing. What is different from the statement 01A offline utility, the purchase transactions that you give in the statement 01A offline utility and the Annexed B is simply the bifurcation, because as we already said, the inverted tax structure refund formula accounts only for the ITC on inputs refund. Therefore, in Annexed B, you should give a clear demarcation to say that these invoices are ITC on inputs, these invoices are ITC on input services, and these invoices are of ITC on capital goods. So you should clearly demarcate that, and you should give an Annexed B, which should match with the refund computation that you have used. But earlier, it was a simple PDF. So in PDF, anything you could upload. We all know in PDF, anything you can upload. There is no validation for the PDF. The jurisdictional officer has to take an extra effort to see whether all the transactions given in Annexed B are in GSTR 2B. He should manually match. See, imagine a situation where there are 10,000 transactions or 1 lakh transactions for a company. For every transaction, the jurisdictional officer will get us, because Excel file cannot be uploaded here as an attachment. Only PDF file can be attached as an uploaded as an attachment. So the jurisdictional officer will take an extra effort to convert this PDF into Excel, and he will manually put a VLOOKUP, and he will find what are the transactions reported that are not in GSTR 2. This extra work is being done away with. Now, from May 2026, a new offline utility, very similar to statement 01A, a new offline utility for Annexed B was introduced. It is a mandatory offline utility, only filling of which will enable you to proceed with the refund application. So, as the Annexed B offline utility has only come now, there are lots of difficulties, practical difficulties or practical hacks that we should employ upon to correctly file the Annexed B offline utility. We all know persons who already filed statement 01A offline utility know that what are all the exact things you should do to get the statement 01A validated, because the date format will be different here. You should keep the Excel to a particular version, then only you can work on the statement 01A offline utility. Very, very similar to that. Annexed B offline utility also has many hacks, which I will touch upon during the next slides. So you please make sure, at least for the time being, earlier, at least I am of the view that in my personal experience, if we need to file an inverted tax structure refund application, if all the details are available, we can file it within a day or two. It's because the statement 01A is the only offline utility. Annexed B, if the breakup is rightly provided by the client, then it is very easy to pull up the PDF and upload it. It was very simple. But now, as the Annexed B throws various errors, you please get an extra time from the client factoring this Annexed B offline utility too. So now you should validate two offline utilities. One is statement 01A, the another one is Annexed B. So you please take into account the extra time that the Annexed B would take, at least as of now. I am very sure that because we are filing Annexed B for the past 1 month, it has been a month to get a real hold of Annexed B, because while it was, I think it was introduced in the first week of May, during the first 10 days, we saw many Twitter posts, or we interacted with many CAs across India to say that what are all the errors in Annexed B usually pops up, and it wasn't getting uploaded to, actually, for the first 10 days from the inception of Annexed B. So now it has been sorted away with. But only if you put a genuine care and employ all the hacks while preparing Annexure B, you will not be put in a situation where you have to repeatedly download an offline utility and you should upload the Annexure B. You can simply, as statement 01A, you can prepare Annexure B once and you can neatly upload it without any validation here. Next thing is auditor certificate. When the refund is above 2 lakhs, you should provide a CA certificate telling that the insurance of tax has not been passed. So the main thing, why we thought that touching this topic today is important is two main things. One is, before Diwali, if you remember, in 2025, we all got a good news in GST 2.0, which reduced the tax for many commodities. The 12% slab has been done away with. For many commodities, for many goods, the tax percentage, GST percentage has been reduced. So, persons who didn't have their tax accumulated from the inception of GST, from 2017 to 2025, they would not have got their tax accumulated. But now, a very classic example of that is packaging industry. They are getting the ITC accumulated now from September. Some management are overlooking this because they are of the view that their ITC will never get accumulated ideally, as they will always sell at a higher price than their purchase price. They would have invested long ago, so their capital goods ITC has also been already eroded with. So they are always of the opinion that they will not be eligible for inverted tax structure refund. But please make sure that after the inception of GST 2.0, if there is any ITC accumulation to you in the electronic ledger. So that is the most important thing, because it has been already 7 months, your working capital got locked in the electronic ledger. So you please make sure, any industry for that matter, if you had a rate change in your industry or in your raw material industry for that matter, you please make sure that you didn't get your electronic ledger balance accumulated over the past 7 months. So the first thing is that, because we personally come across many taxpayers who were not aware that their ITC got accumulated during the course of time. They had accumulated balance of a very mid-sized company had accumulated balance of around 20 lakhs, 30 lakhs over the last 7 months, which is very huge from their point of view, because their working capital would get ideally blocked here. They would have availed a CC to fund this working capital. So you please make sure that there is no accumulation under electronic ledger. The second thing is the introduction of Annexure B. Of course, this Annexure B validation is also to be done for export refunds, zero rated supply refund, as I had told you earlier. For inverted tax structure refund, as many are filing inverted tax structure refund, this Annexure B validation is getting a headache for auditors or accounts department, whoever is filing the refund application for the time being. So we thought, what are all the errors that are generally coming in the Annexure B, and we thought we would give you a hack based on our practical experience that we had over the past month. So the first thing is, if you don't file the Annexure B correctly, you will get a validation error. You should again and again, you should download a fresh offline utility, feed it, and then upload it in the portal. And if you get a validation error again and again, it is complete waste of time. So please make sure the first time filling of Annexure B itself contains the correct values and as per the hacks employed upon. So the next thing is, if you don't correctly file the Annexure B, if you file, for example, if you file 2 to 3 transactions only out of 100 transactions, you simply filed an offline utility containing 2 to 3 transactions just to validate it for the time being. The system itself will not allow you to file the excess, fill the refund computation formula, excess ITC, what you have given compared to Annexure B. For example, if you have an ITC of 1 lakh rupees to be come into the GST refund computation that we have seen earlier, if you are uploading only 10,000 rupees invoices in the Annexure B, it will allow you to only edit till 10,000 rupees. It will not allow you to edit the refund formula up to 1 lakh rupees. In the refund computation ITC column, it will not allow you to edit up to 1 lakh rupees. So please be mindful of that. Then the wrong upload of Annexure B, wrong classification, because input services, capital goods classification and all will not be validated actually by the portal, because in the first place it doesn't have the data, what is input services, that the taxpayer only has to tell. So, but if we are filing, if we are classifying it wrongly, then there will be refund delay, because an RFD 08 will be issued by the department, a notice will be issued by the department, and after replying to the notice only, they will deduct that, and you will get a refund. And after deducting that, to get into the electronic ledger, it will not come automatically. You should file a PMT 03 and then only get it in the electronic ledger. So there are lots of issues if we file the wrong Annexure B. So please be mindful of that. So Annexure B preparation strategy for me is, what we do is we file the GSTR 2B from the GST portal, the first hand, because as I already said, the portal validates only from the GSTR 2B. So while filing the GSTR 3B itself, you have performed a detailed reconciliation with respect to books and GSTR 2B. Therefore, you straight away download the GSTR 2B and just remove the ineligible ITC what are all in the GSTR 2B. That's it. So you take the GSTR 2B and you prepare Annexure B in Excel. You just reconcile with books. In what point of view I am saying is, you reconcile with the books, so the total value matters. Whatever you have taken ITC as per GSTR 3B, that breakup you are giving in Annexure B. You please be mindful of that, because there may be a scenario. Of course, only ITC on inputs and ITC on input services is being considered for the refund computation under the inverted tax structure. But there might be a scenario where later on, when an audit or inspection comes, the department may say that you have taken 3B ITC of 1 lakh rupees, but you itself have disclosed only 90,000 rupees in Annexure B. You should give entire GSTR 3B breakup in Annexure B, but only take ITC on inputs and input services refund ITC for computation of refund. But if you have given only for 90,000, then there always may be a question in the future to say that you itself have admitted that you are not eligible for 10,000 ITC. You itself in the first place, you didn't have breakup while filing refund. So you cannot prove that you are eligible for this ITC. They may take in adverse situations, the department may take that view. We cannot fight it to, because we cannot fight it to in the first place itself, because the Annexure B is prepared by us as the taxpayer. So later we cannot go on and say that what Annexure B we have given is, we have suppressed the transaction and we have given only lesser ITC. That stand cannot be taken at a later date. Also be mindful that all the ITC that you have taken during the month is getting reflected in GSTR 2B, if in Annexure B of GSTR 2B, because once you miss a refund, for example, in the refund computation, you have to give 10 lakh plus ITC, net ITC on input, you have to give the value of 10 lakh rupees. You erroneously gave it as 10,000 rupees. You erroneously, clerically, you gave it as 10,000 rupees. The refund formula adjusted it, and the refund value considerably came very lower compared to what the actual refund is. In the future, you cannot correct it, because we cannot file a second refund application under the same category for the same period. So once the refund bill is sanctioned, it is very, very tough for us to go back and say that, sir, I have claimed lesser refund than what I was eligible for, so you please give me the excess refund, because the jurisdictional officer will be of the view that whatever you have applied for, that only I can scrutinize. You cannot say that you applied for 1 lakh rupees, I will sanction it for 1,50,000 rupees at a later date. So that will be very, very detrimental. So please make sure the whatever ITC you have taken in GSTR 3B, you have a clear breakup in Annexure B, and you at last you subtract the ITC on capital goods and ITC on input services. So what are the checks you should make before uploading Annexure B? You should make sure that the transaction is in GSTR 2B, because no transaction, unless it is an RCM transaction and an import of goods transaction, Unless it is in GSTR 2B, the annexed B will not get validated. Even a small error for invoice number 43043, you have given us 43 in annexed B, it will not get validated. So you please make sure that the exact value and the numbers that got reflected in GSTR 2B gets translated to your annexed B. Purchase register. You please make sure that what are all the ITC that you are giving in annexed B is our ITC, is actually present in our books of accounts. So there might be a scenario where an irrelevant GST might have uploaded ITC in our name. In that scenario, in GSTR 3B also, what in GSTR 2B we would have claimed GSTR 3B in such situations to take it as an extra kick, because as soon as we reverse the ineligible ITC, it is better for us because of the cost of refund and penalties. As soon as we find the ineligible refund, if it is not related to us, please reverse it then and there, because if you take it in GSTR 3B, it's a separate problem. If you file a refund for it and get the refund, and later on if the department alleges us, then it is altogether a separate problem, because they will proceed under section 74A fraudulent cases. So it will be a separate headache for us. So please make sure that what are all the ITC uploaded in annexed B is our ITC. ITC claimed. You make sure that you have claimed ITC in that month. There may be a scenario where the May end ITC you would have claimed it in June, because you would not have received the goods in that period. You would not have got that invoice itself, but the supplier would have uploaded it in his GSTR 1. You would have deferred it and claimed it in June return. Whatever got reflected in May GSTR 2B, you would have claimed it in June return. You please make sure that it becomes part of only June refund calculation and not May refund calculation. From that also a separate concentration is required. Refund period. For example, if we are filing for April 2026, I am going to file a refund. I have selected inadvertently, I have selected April 2026 to May 2026 as period. But I have uploaded only April 2026 invoices. The portal's work is only to check whatever invoices you have uploaded already got reflected in GSTR 1 or GSTR 2B. It will never say that in GSTR 2 and GSTR 1 you had an extra invoice that you are not showing it in statement 01A. It will never show that. So please make sure to what the period selected is whatever you are intending to, because we have seen situations where the taxpayer would have filed refund for 1 month only, but in the periods he would have given us April to March 2025 to 26 for the full year. It is very tough for us to go to the officer, and you cannot withdraw this partial application too, because for April 2026, April 2025 you would have applied refund. So it becomes very, very tricky. Unless you go to the courts, it will not hold good. So please make sure you select the correct refund period. Then supplier GST. Of course, only after giving the supplier GST correctly, after the GSTR 2B, the annexed B will get validated. Invoice values. So many errors, what I have seen is they will switch invoice value and taxable values, which cannot be done. So please make sure the invoice values gets reflected in the corresponding invoice value column. So general work proceedings of annexed B is never copy paste in any drop down fields. There are many fields in annexed B. It asks for type of invoice supply. If it is from registered person, or it is RCM, or it is imports, it will ask what is the type of invoice supply. Document type, it will ask if it is invoice or credit note or debit note. Category of input, if it will ask for whether it is inputs or input services or capital goods. Eligible for ITC, there might be some GSTR 2B transactions which will not be eligible for ITC. Our view is whatever is eligible, only bring it to the annexed B. Whatever is not eligible, we need not bring it to the annexed B itself in the first place. But if you are bringing in the entire GSTR 2B and bifurcating it as eligible for ITC, yes or not, then please be mindful of this. Blocked credit indicator. If it is a blocked credit, you please give us eligible for ITC as no. So in these drop down fields, you should never paste values, because what we generally do is in IT return, GST return, or refund applications, what we generally do is all of us in accounts field, we will get the exact specimen of this in our basic Excel. Then we will always ultimately copy that Excel into the utility. That cannot be done in the drop-down fields. In drop-down fields, you can give one field and you can give Control D to copy to the other fields, but you cannot simply use the copy paste. It will show error, runtime error. It will show, but it will get fed after that too. But the annexed B subsequently at the end it will not get validated. You should then again download a fresh annexed B offline utility, and you will you should start the working from the first column. So please make sure that in the drop down fields you do not copy paste any values. So utility corrupt, if these errors occur, the utility will not utility will become corrupted and validation will not be there. See, there are two validations. One is offline validation. Offline validation, if you give the correct type of values in the correct columns, then only in offline it gets validated. While uploading the portal will check whether you have the concerned transaction in GSTR1 or GSTR2. So there are two validations. We should bypass both the validation to get our refund file. So please make sure that all these errors are not done while filling XMP. Next, pasting data. In the remaining fields too, in the drop down data, you can never paste data. You can only select or give Control D to the other columns, other cells. In other cells too, you cannot simply paste the data. You can only paste data as values. You cannot simply paste the data. You should only you should select the in the pastel dialog box. You should select paste as values. Control Alt V. Only if you give it, it will take into account, because in the original Excel sheet that we worked upon, our Excel sheet that we worked upon, there might be formulas. There might be formulas from GSTR2. You would have used a VLOOKUP. You would have pulled up the values from the pivot table. Those are all should not come here. Again, I am saying, once this error happens, then we have no other choice than to download a fresh connected B offline utility and start right from the first cell to again fill the annexed B from the initiation. So please make sure that no errors are done during the filling of annexed B. So you should paste only with values. Then only it will correctly get validated. So the main thing is date format. As very similar to statement 01A, the same DDMM format is there in statement annexed B2. So therefore, don't give a separate different format like slash or putting the name of the month in the middle. Don't do that. Please stick to the date format, exact date format that annexed B is worked upon. Only then the annexed B gets validated. Another thing is, in the annexed B, unlike statement 01A, in the annexed B, there is a topmost column saying that what are all the ITC, summation of what are all the ITC you have received. Then it will also ask what are the ITC reversed. You should give 00 in that field. Only then the annexed B will get validated. So,
in general, it is
from the start, the refund time limit is always 2 years. The 2 years is very strictly construed upon. So if you have time lapsed, if your refund application is time lapsed, then even in my personal opinion, even High Courts or Supreme Court wouldn't be able to give relief to us. So please make sure that whatever refund is due, we apply within the time limit. Generally, the business people, what they generally do is every month, if there's a sizable accumulation, like around 5 lakhs or more than that, they file a very monthly they will file a refund application, or at least quarterly, or at least in the worst case, yearly refund application. Once the year is over, for financial year 25-26, you should put an entire refund application. Please don't wait for the last date, because if there is some deficiency in our refund application, and if the jurisdictional officer gives RFD 03, for example, I am applying in the end of one month, 1 year, 11 months so the refund application should be filed within 24 months. Assume I am applying it in the 23rd month. the officer gives the deficiency memo in the end of the 24 months. And if I again re-upload it in the 25th month, I cannot go on to say that the officer has took 1 month. So I am filing 1 month belated refund application, correcting the deficiencies officer has reported in his RFD03. That stand is not generally accepted. So please make sure that you file the refund application as soon as. So common issues that we face in IDS refund is practical issues is one thing, that is with respect to Annex B. Filing the refund application, what are the common issues we face? We should prove to the satisfaction of the officer that IDS refund is eligible. We should be able to demonstrate that because of our input output GST rates, our GST refunds, GST ITC gets accumulated. In many scenario, what we generally do is we give a photo of our products, we give a photocopy of products, or if it's possible, we would also take the products to the jurisdictional officer. The jurisdictional officer should get satisfied that you are eligible for inverted tax structure refund. Merely by having an ITC balance in their electronic credit ledger, you would not be entitled for refund. So we should make sure that the jurisdictional officer is convinced that we are falling under the inverted tax bracket. Next interesting thing is taking ITC of belated months. See, as I already told in an example, in May 2025, May last 2025, you would have received a goods. You would have ideally took the ITC in June because you would not have received the ITC in the first place, the goods in the first place. But ITC would have correctly reflected in the May 2025 GSTR 2B itself. But you have deferred it and taken in June 2025 GSTR 3B return. It is absolutely constitutionally correct. Actually, you are eligible for ITC itself in June only. You are not eligible for ITC in May because as per section 16, you have not received the goods in the first place. So in that scenario, while applying for refund, there are some views from the department to say that you cannot claim May ITC in June refund application. So what we should generally prove to the officer is that while filing the May application, we had not included this particular invoice in May refund application because their main, what the main issue they see is, if we are taking a double refund for the same invoice, practically it is not possible because once you file a May statement 01A utility, if you put the same transaction in the June May invoice itself, if you put it in June statement 01A, it will not get validated in the first place. The portal will throw you an error saying that you have already shown this transaction in earlier refund application. So it will not practically allow you. We should prove that to the jurisdictional officer to convince them that the belated month ITC is only the ITC which is reported first time during this month. It is not earlier reported at all. The next thing is including ITC of traded goods in ITC computation. So the first thing, while explaining the inverted tax structure refund itself, what I have told is the traders will not get ITC under inverted tax structure. The ITC inverted tax structure refund is only for people who manufacture generally, who process goods, who gets a raw material different from that of finished goods. Basically not a trader. So only them will be eligible for IDS refund. So in any other scenario, you will not be eligible for refund. So there might be a circumstance where a taxpayer deals in two goods. One is he is trading goods. Another thing is he will purchase a raw material and he will sell a finished goods. In that scenario, in the inverted turnover, you should only include the actually processed goods, finished goods sales. You should not include the traded goods because in the traded goods 5% or 18% will set off in itself. Therefore, no refund will accumulate due to that. So you should include only the inverted turnover. So the law clearly says that the lower rate turnover, it doesn't say. In the formula, it doesn't use the words lower rate turnover. It says exactly the words inverted duty turnover. So in that scenario, only for finished goods for which raw material GST rate was higher, that turnover alone is to be included in inverted duty turnover in the numerator. Then including turnover of traded goods in turnover computation. But in the total turnover, you should include all the turnover, because the ITC you are going to give us for the inputs on entire stream of things for both the division. So turnover, adjusted total turnover, you should put for entire turnover. You should account for entire turnover. Only in the numerator inverted duty turnover, you should not include the traded goods turnover. So this is all I thought I will charge you with, mainly with respect to the new GST 2.0. Many goods have come into the inverted tax bracket. So please make sure, if you are an auditor, or if you are even in the accounts department, or if you are running a business, please make sure that your client or your business doesn't have an electronic credit ledger balance and it doesn't get accumulated from the last September, because at least 6 out of 10 taxpayers whom we have seen were of the view that their ITC will not get accumulated, because they have been trained in such a way from 2017. Their input would have been 18%, their output would have been 18%. But now their ITC gets accumulated. So you please check the ITC accumulation, and if you are eligible for inverted rated turnover, inverted tax structure refund, please apply for the refund at the earliest. You can also reach out to our team, our Zentax team. We have a separate exhaustive webinar on GST refund itself in our YouTube channel. You can look into that too. So with respect to refunds, if you have any query, you are free to ask. You please reach out to our team. Will definitely clarify to us. I'll just take some Q&A and yeah. So the new Annex B offline utility does not accept HSN code starting with 0. What to do? Sir, actually it will accept, sir. I'm thinking that if you are 0932 like that, if you are giving, it will not. You are saying that it doesn't accept 0. It doesn't accept 0 only if we give 4 numbers, sir. 4 HSN code. If we give 8 characters, then it accepts, sir. You please check and let us know. We will show RTM invoice also, sir, because for export refund, you are eligible for refund on ITC and input services too. In inverted tax structure refund too, ITC on input services is accounted for. In the second wing of formula, it is accounted for. So you should definitely show the RTM invoices. But once you select the RTM invoice in the invoice type, it will not ask for GST number and all, so it should not be an issue. What is the role of HSN code in the refund process, inverted and export refund? Is strictly followed in our ledger. Sir, usually, Felix Babu, sir, usually in ledger, many taxpayers are not accounting for the HSN code. That we definitely understand, the practical aspect that we definitely understand. But the department is of the view that they should understand what business the taxpayer exactly does to process them an export refund or inverted tax structure refund for that matter. So therefore, the HSN code disclosure is mandatory in Annex B. Even though it is not separately accounted in books, what we do is we pull it up from the purchase data and we give the Annex B, because without Annex B, we cannot, without HSN code, we cannot validate the Annex B or Statement 01A utility itself for that matter. The reporting of invoices with multiple categories are HSN or SCC codes. If an invoice of same percentage ITC having different HSN codes, whether we have to show separately. Separately showing it, the Annex B doesn't validate the separate showing of ITC. You should accumulate and only then you should show it in Annex B. So different HSN codes. What we also see come across many purchase invoice, like there are 10 HSN codes in a single purchase invoice. We put a predominant HSN code that we think what is the exact nature of goods, we analyze and we put the predominant HSN code and we give a single line item. Next should be port code. Invoice supply from registered person, if you give Arun sir, it will not ask for port code, sir. It will not ask for port code. Only if you give import, it will ask for port code. Rajshekar, excess GST interest paid. Sir, after filing refund application, if it is not processed within 75 days, then for that interest is paid, sir. Otherwise, interest is not paid. We cannot ask interest from date of our payment to the supplier. So that interest is not paid, but definitely if the refund is pending more than 75 days, because it is department's obligation to sanction or reject the refund within 75 days. If they are not doing it after 75 days, we will be getting a GST refund at around 6%. Yes, sir. I think that's all the question. So thank you very much for the patient listening. Any doubt with respect to refund, you can definitely reach out to us. You can reach out to the Zentax team. My name is Prashant Surya. You can reach out to me too. So thank you for the patient listening. We'll come up with another exclusive webinar over the course.